Hey everyone, Coach Investor back to another video for you today. So just like in my last video, we're going to talk about two stocks I think might be good ones to pick up before the next earnings report. In my last video, we talked about Pinterest and Peloton, what they've been doing in this quarter. Both companies were down 30% since their last earnings report. If you want to watch that, it's going to be in the top right corner. In this one, we're going to talk about the Trade Desk and Roku. Now, those companies aren't down 30% since their last earnings. Roku is down 23%. Trade Desk is down around 12 to 13%. Now, the main reason why Roku is down 23% is because of this resurfacing of old news with regards to Google, Amazon, TLC, and the dangers and the competition that is coming for Roku. Now, if you've been following the company for a while, you know that this is something that we've known for a long time. Obviously, there's no market without any competitors. Roku has had competitors for a long time and still has beaten them each and every time. Every quarter is another better quarter, and I expect another great quarter in the next ones to come. I hold a position in both companies, in Roku and in the Trade Desk. So let's discuss what both companies have been doing this quarter. But first, I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Now, Stock Advisor has beat the market by more than 4x. So all you have to do is go to fool.com/couchinvestor to get your free 10 stock picks now. Now let's dive into this. Alright, so first up, let's talk about Roku. When we talk about Roku, we obviously have to talk about linear TV and how linear TV is actually dying. I've been talking about this for a while. Linear TV is dying, connected TV is thriving. That means that advertisers and advertising dollars have to move from linear to connected TV. Who's going to gain from that? Obviously, the likes of Roku and the likes of the Trade Desk, obviously Google as well, many others as well. But Roku and Trade Desk are going to be the big winners here. Because with connected TV, first of all, the TV is probably one of the best ways to advertise yourself, to get exposures to other people so that your brand gets recognized. Because the TV is usually or in your living room or in your bedroom. So what better way to just plug in your brand and let people see that? Second of all, with connected TV, you just get way more data, you collect way more data, and you can analyze that way better than with linear TV. So that's one thing that has been going their way as well. And I believe that advertising spending will just increase each and every year. Second, and that's probably a big move from Roku, and that's content. They've been adding lots and lots of new content on their platform, whether it's on the Roku channel with their ad model or right now behind a subscription model. So Roku has actually added The Old House, a home improvement TV franchise, and that will be coming to Roku ad-free but via a subscription. Gusto TV is also launching on Roku as well. Now, while I don't see Roku spending billions and maybe hundreds of millions of dollars on creating content, I do see them acquiring those small franchises and put that behind an ad model or maybe a subscription model. Obviously, in my eyes, I do think they will put more content behind their ad model than behind a subscription one, but to have the option to choose to see ads or not to see ads, that's always a good one to have. Now, third point is that they're expanding actually outside of the United States. We know they've been available in UK and in Germany. They're actually recruiting for technical and engineering roles in Manchester and has reportedly identified office space in the city. Now, there has been no official comment from the company, although it's evidently recruiting for Manchester-based engineering roles on platforms such as LinkedIn. In June, it hired a senior technical recruiter based in Manchester who previously worked for Google Cloud and AWS. We'll probably hear more about the European expansion in the next earnings call. Now, next point, and that has something to do with the content that's going on the platform, the ad model on the platform as well, and that's a partnership between Roku and Shopify. Now, you might know where I'm going with this, and that's basically you watching TV, you watching maybe a reality TV show, a cooking show, doesn't matter. You see a product you like and you click on the buy button and you just bought a product directly from a TV show you've watched, from a reality TV show, basically buying from your TV and it is getting to your house. So what does this partnership with Shopify entail? So this is going to be the first ever TV streaming advertising app available on the Shopify App Store. It will enable Shopify merchants to easily build, buy, and measure their TV streaming ad campaigns. In this way, we're making it easier for smaller companies, including those with smaller marketing budgets, to advertise on TV. Because in the past, only huge companies with big marketing budgets were able to advertise on TV. Now, through this partnership, if you're a merchant on Shopify and you don't have such a big budget, you can do this as well. And since it's connected TV, you're doing it with Roku, you can see much better what's going on with your ad campaign. Is it successful? You need to tweak it. You need to stream it at a specific time. You can target exactly who you want to target. So this is obviously going to be a huge deal in the future. And then again, buying directly from your TV is going to be big as well. So as you see, Roku has been doing quite well this quarter. I expect a great earnings report. And obviously now that we're heading into the holiday season, obviously the next quarter might be even better because advertisers like to spend more money during the holiday season. Now let's talk about the Trade Desk and see what they've been doing in this quarter. So first up with the Trade Desk, we're going to talk about something that is called audio out of home. The Trade Desk is first to market omnichannel DSP meaning demand side platform, to support audio out of home through partnership with Vistar Media. Now you might ask yourself, what is audio out of home? So I'll give a short and funny example. Let's say you're in the supermarket, you're walking through the aisles, it's 4 p.m. and suddenly you hear some music in the background with a message saying, are you hungry for some chicken tonight? You can find chicken at 10% off on aisle 6 or something like that. Now, it obviously differs on which store you're going through. If you're in a supermarket, if you're in a clothing store, doesn't matter. But audio out of home is very important and a crucial part in a marketing strategy. Because now through this partnership, you can actually customize each and every message. A different message at 8 p.m., different message during lunchtime, during breakfast time, different music, different message through every single store. It's going to be very crucial for every store to have the ability to customize their message if it's in the morning, during lunchtime, or maybe in the evening as well. Because what's very crucial here is that you, the shopper, are already inside the store. You're not listening to this message at home or in your car. You're already inside the store. This means that the intention to buy is already very high. This is a great partnership to see, and I do expect other companies to take advantage out of this as well. Next up, you've probably heard about this, and that's the Walmart DSP partnering up with the Trade Desk. So the main points of this partnership is basically connecting with the right customers at the right time. You have full access to the Trade Desk rich inventory across multiple channels, display, streaming video, mobile, audio, CTV, etc. and closing the measurement loop across digital and in-store sales. Now, Needham has released a report and they talk a bit more about that. So we're going to go over that right now. So they say here that Walmart will not pay the Trade Desk a revenue share, but the Trade Desk will make money from attracting shopper marketing ad budgets from consumer packaged goods advertisers that want to move products on shelves at Walmart. They expect the Trade Desk to charge its normal platform fee of around 15%, plus get upside from incremental value added services, 500 incremental basis points of media spending. Now this is where it gets interesting. The shopper marketing budgets represents an incremental $100 billion in total addressable market for the Trade Desk. Walmart is basically trying to mirror Amazon, which reported $7.3 billion of shopper marketing advertising revenues in Q2 2021. Now, before you get all excited, this will only go into effect at the end of October, so just right in time for the holiday season, meaning next quarter is probably going to be very interesting. Now, last point, and that's the Unified ID 2.0. you've probably heard about the various changes in cookies, in privacy settings, etc. So the Trade Desk has obviously worked on that as well, and they came out a couple of months ago with the Unified ID 2.0. Now Google has delayed the suspension of the use of the third-party cookies, but that really won't affect the Trade Desk so negatively. So you might ask, what's the main goal for UID 2.0 and why will advertisers side with them rather than Facebook, Google, or Amazon? So the main goal here is that you can take advantage of the open internet instead of the walled gardens, because with the walled gardens, you really don't have access to as much data or as rich of data than the one that you're getting in the open internet, because, well, the name says it, open internet, walled garden. Which one do you want to take advantage of? Most likely the open side of things. So that's obviously something that will take time to ramp up, but I do believe that in the years to come, the UID will become a huge part of their business and more companies will start to use the Trade Desk because of this. So overall, to conclude, I'm bullish Roku and the Trade Desk. I think both companies are in a huge market, in a market that is going to see a very big shift in the years to come. Cord cutting is not new, but there are still billions and billions of dollars going into linear TV, and that will obviously change through time. I do believe that by 2030, both of those companies will be much bigger than what they are today. I would like to know what you think about both companies. Let me know down in the comments below. And if you like this video, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And as always, guys, take care, stay safe, and see you all in the next video. Bye bye.